Dipan, will you concur with the view? And I specifically wanted to talk to you about Union Bank, if you track that one, because I think it's the second QIP that bank is doing within a matter of 8 to 10 months.
Good morning, and thank you for having me on your show. I think Union Bank is following a very sensible strategy. And while the going is good and there's so much of interest in banking stocks and the performance also has improved, so they are using this market opportunity to shore up their capital, and eventually that will translate into higher growth rate because higher capital adequacy will enable them to drive their credit book as well. And they'll be able to utilize the entire brand and the distribution network to perhaps lend more. So from that point of view, it's positive. And of course, I think valuation-wise also there's a lot of comfort when it comes to most of the PSU banks. On the whole, I think we are seeing better sentiment for the banks. But then when you look at the numbers which came through for the December quarter, there's a slight bit of caution and disappointment. By and large, most of the banks declared pre-provisioning profits, which were more or less flat or maybe mid to high, slightly high single-digit growth. And earlier quarters, it was typically in the mid-teens. So we are certainly seeing a slowdown in the pre-provisioning profits, and net profit increases have come more through lower provision costs, which cannot be sustained. End of the day, the base effect will catch up over there. So I would say that one should be very selective when it comes to banks. And of course, there's a bit of valuation comfort, but then growth rates also are slowing down.
Dipan, markets at an all-time high, but the thunder, I guess, is missing. Will it be a fair statement?
No, but good. No. Nikunj, it is fantastic that the thunder is missing because if the market goes up quietly, then you can certainly say that the froth is not there and the risks are lower from that point of view. But I think we are seeing a lot of power of liquidity coming in. You may think the thunder is missing because a lot of money is coming through institutional managers, especially mutual funds. And although we have a lot of retail investors coming into the market, but the money is coming through mutual funds or through portfolio managers. So we are seeing that the percentage of professionals managing the money compared to just raw retail coming to the market is significantly higher at this time around in this bull market than ever before. So that may explain that part of the thunder is missing, but I'm perfectly fine with this kind of a scenario.
So Dipan, now the question is what's next? Will it be earning season? Will it be the good old retail and MF activity, or will it be the volatility in and around election results? What's next for next 3 months?
Well, that's a difficult one to answer, Nikunj, because you're right. There are hardly any triggers for the markets to move up or down from that point of view. All the risk factors which have been plaguing the market, 2-3 years ago or so, that being rising inflation rates, to an extent geopolitical events, spike in commodity prices, Chinese economy. I think all of these more or less have been discounted, and as such on the horizon, one can't really figure out any new particular trigger which can take the market lower. At the same time, I think all the positives also have got priced in. I mean, I know a lot of investors are saying that in the elections, the BJP government will come in even stronger, and they have this thing that they want to get 400 seats in the NDA. But my response to that is that what can this government not do with the present number of seats which they have, which they will be able to do if they have 400 seats. So from my point of view, any increase in the BJP NDA numbers in the Lok Sabha is not going to materially change the way the economic policies are being followed, or for that matter, the kind of people who are managing the economy at the cabinet level, the finance minister and all the other key ministries, I think will remain particularly the same. So we'll have more of the same government policy. So where is the trigger over there is my question. And that's the reason I feel that one needs to be a bit cautious. You can expect more of the sideways movement. At the same time, we are seeing mild disappointments coming through in a lot of earnings this time around. It may continue to the March quarter as well. When you look at the growth rates and you look at the valuations at this point of time, we just don't have the margin of safety.
I'm just honestly scanning through stocks here. Dipan Mehta, first half of last week, Paytm only went one way, down, 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 down. Now Paytm is only going one way, up, up, up and up. If somebody wants to know that, is this a good time to buy into this fire sale in the Paytm stock, how would you advise it? Because if you get it right, then this could be a doubler in next 2-3 years. If you get it wrong, it could be down by 30% from here.
I think that's a fair risk return profile. I think that you're taking a 30% knock for doubling. But if Paytm was solidly profit making and its business model was understood better, as also the fact that even prior to this, there were certain challenges. The main driver for Paytm's earnings was their loan syndication business, and over there also there were certain changes in regulation which prevented them from raising loans, especially unsecured loans. And we are seeing this entire move of the RBI to try and curb unsecured loans to retail, these loan syndication. They want to regulate it better. To an extent, Bajaj Finance also got impacted by those RBI regulations. So I'd be a bit cautious in Paytm, and considering that our view on the markets is negative to slightly cautious, I would just avoid companies where there's so much of uncertainty and keep the powder dry to buy great quality businesses which may be available should there be a correction.
As a take coming in on Paytm, yes, it's been a roller coaster ride. Let's see which end it really goes to, 30% lower or a multi-bagger. Dipan, I also wanted your take regarding QSR and this packaged food space. There are a few IPOs which are in the pipeline. That's got the street excited. Devyani, of course, that big block deal happened this morning wherein Yum Brands has offloaded the stake. And then there is a news flow on Varun Beverages that they're looking at doing. We had heard the news about South Africa, etc. already. Within QSR and packaged foods, what are your top recommendations?
None at all, I think.
Because of the
Because,
valuations, or
yes,
what's the
absolutely.
reason?
Healthy habits. I don't promote junk food. I don't eat things which, in a sense, he's a marathon runner. You have to realize that. How will you promote such companies? Am I right?
No, no.
ऐसा कुछ
You're
नहीं
right that
है.
I'm a marathon runner, but certainly, we have investments in QSR, have investments in Devyani, which has not done well for us. In the past, I have owned Jubilant Foodworks also, and of course, I think Varun Beverages worked out really well for us. But it boils down to valuations, and these companies, they've disappointed two straight quarters in a row. All of these QSR companies, it's not that their stock prices corrected significantly to account for those earnings disappointments. And when you look on a trailing 12-month basis, these are like what, 80 times, 90 times, 130 times trailing 12-month. So, you can't make money when you're buying a stock at 80, 90 times trailing 12-month, however good the prospects are. And that's the reason why we want to be a bit cautious on the entire QSR space. And when there is some sort of alignment as to what their profitability is and what their valuations are, then these companies are interesting. See, typically these QSR companies tend to capture the imagination of investors because you can, forecast the earnings 10 years into future, easily stating that, these companies will be around for the next 10 years and they can grow at 10%, 12% easily, and they keep on expanding their network and changing habits in terms of food, and rising spending, rising consumerism will drive their growth. Okay, so far so good. But then what's the reason why from time to time, every 2, 3 years, they have these soft patches which last for 3, 4 quarters or so? And this could be a soft patch which lasts for 3, 4 quarters, but the valuation and the prices have not corrected. And that's the reason for my advice to stay away from the QSR space.
Well, what a year it's been. I mean, for Varun Beverages, frankly, it got listed, nobody noticed it. But now the fact that they are having into a serious relationship with Pepsi and they are moving out of borders, also it's quite interesting and quite encouraging. Dipan, are there any red flags in autos? I was looking at the month of Jan, and that's the only evidence which we have in terms of dispatch numbers. There seems to be a subtle slowdown which is now there in luxury cars. There seems to be a subtle slowdown, not a slowdown, but a visible slowdown in tractors. Now, autos have been in performing group. Is it time to take it easy now?
I would think so because, if you see auto numbers this time around, yes, I think volumes have stood up, have been steady, and which I think eventually, once the base effect comes into play and once all the bookings start to get utilized, you may see a mild slowdown over there. Also, what I noticed is that the average selling price is also kind of stabilizing. Earlier, we were getting 14, 15% type of increase in average selling price. Now that's more like 7 to 10% or so. And this quarter and last quarter, the earnings really did well because of lower raw material costs. But eventually, lower raw material costs will only do so much once you have the base effect coming into play. The profit margins cannot really move up much more from these levels. There was benefit of operating leverage as well, which will not be there going forward if the top line starts to slow down. And it's not that valuations are cheap. These companies also are trading anywhere from 25 to 35, 40 times their trading 12-month. So I would also be a bit cautious on auto, but not so much as compared to some of the high-profile consumer company like QSR, maybe to an extent, or some of the other fancied stocks per se. But yes, I think you can't expect the same kind of returns from auto companies what we have seen in the past 3 years into the next 1 or 2 years or so at least.
22249. What a number it's been. I mean, 22249. You just think about it, how things are. But there are two group of stocks which have fascinated me, really fascinated me. And my producer has guessed it because I talk about them every day. Trent and ABFRL. Go back to 2020. Stores were shut. Nobody was going to stores. Online retail did not pick up. So from 2020, if one looks at Trent, it has gone from 400 rupees. Hello. 400 rupees to 4,000 rupees. 400 has become 4,000. ABFRL, 3-year return. ये क्या है कुणाल?
100 to 250.
No, 3-year return is, if you look at this chart, it's actually giving you negative returns.
I think in 2020 it was
From the low.
from the lows.
So I'm saying you look almost like the
compared to
pre-COVID
Trent
high.
has, of course,
It has not
outclassed.
gone back to its pre-COVID highs also.
No, I think it had done it in 23.
Yeah, but right now it's not
right
at the
now it's
pre-COVID
not there,
high.
correct.
Dipan Mehta, isn't this fascinating? One Tata Group company, other Birla Group company, both are in the same businesses, both are from pedigree groups, both are expanding. But in terms of return, one has been a multi-bagger and one has been a dodo performer.
Yeah, I think as a trend shareholder, only thing you can, ascribe this kind of a value is on account of the kind of focus that the trend company, the trend group has. They're very focused. Unlike other retail companies which have gone about acquiring new brands and getting into many things, including many products. But here we had Trend, and then they did Zudio, which is focused just on apparels, and a lot of it is their private label, which have got very high profit margins, and they've been extremely, I would say, sharp in terms of new store openings, and they've clearly leveraged the Tata brand, their supply chain advantages, and their overall, I think, merchandising has worked out really well for them. I think if you speak to people who shop at West Side, which my family does, and they kind of, there's a high degree of loyalty over there as well, and consistency of products. And I think that's been reflected in the stock price, which has done as well. In any case, a company like Trent has got a very, I would say, the shareholding pattern is very tight, and there's hardly any floating stock. And once you have money coming into your fund or your portfolio or a portfolio manager, and you have Trent in your portfolio, you have to buy more of it. That's what causes the stock price to move up even higher. But at these levels, I don't know whether you can buy at 4,000 rupees and expect to make a great deal of return. So you need to wait for a correction. In a market correction, you could get Trend 25-30% cheaper or so. And then if you have a horizon of 3 to 5 years, then this company can still make money for you.
See whether that correction happens or not, because for now that stock has been a massive wealth generator. But Dipan, before I let you go, last question, and this one in the capital goods space. ABB came out with its earnings. Not sure if you got a chance to look at it, but very strong order inflow.
Yeah, that's right. I think not surprised at all. I think across the board, capital goods companies have been getting very strong inflows. And ABB clearly, they've done a fantastic job when it comes to changing the profile of their products. They're now more and more into factory automation or smart city solutions, or for that matter, other high-tech products and service offerings, and not the typical, products which they were offering for electrical in the electrical space. And that clearly has worked out for them. But business still remains quite cyclical, and valuations still remain extremely high. So I would say that at these levels, the risk return profile doesn't really favor you.
Appreciate your time. Thank you so very much for joining us. And I must apologize to you. I know we booked an appointment with you to shoot at Dalal Street, but trust me, something unprecedented came that day, so I had to stay back. But you still owe me a coffee, which you promised me.
Absolutely.
वो change नहीं होगी.
Anytime for you, Nikhil.
Look forward to it. Thank you, Dipan bhai.